We're going to do a speed run of safer stocks to add to your portfolio. So, really on the safe end that still have extremely high upside. And we're talking about getting in as soon as this week, just based off what we've seen so far. So, how do these stocks react? Netflix, Zillow, Fiserv, Microsoft, Figma, ServiceNow, Oracle, Alibaba. Super quick breakdowns of each stock so you guys are on the same page as what I'm looking at. And also, of course, at the end, we're going to narrow down one that right now I would put the most money in. Quick shout out though, because one of our analysts in VIP has been going crazy, 400% on gold puts. These guys all got in. His name is Clutch. He's super consistent. He had a 1,500% gainer the other day as well. But check it out. Did you get in these 400% gainers? Every $1,000 you put in would have turned into $5,000. I also had some great option alerts today, up 50% on one contract, and well, I'm holding multiple contracts, but on one contract that I alerted, and I'm expecting about 100% gain on a second. And then there's one more contract I'm in. I'm still waiting for that to have some more movement. But also, amazing stock alerts recently as well. We're up like 30% in one day on two different stocks that were recently alerted. My portfolio is doing great. So let's talk about stocks that I'd like to now add with some profits, but not that I'm looking to make like 1,000% on. I'm not looking for the next Moderna, the next Intel, the next Micron, which are stocks that I've made a ton of money on. Even Robinhood, that was a super quick banger. These are ones that I like to park money in for a while, but still outperform the S&P 500. So which one of these makes the most sense? Well, let's start here with Alibaba. This is one that I don't hold in my portfolio. So there's some here that I have not added to my portfolio yet, but maybe I'm looking to add them now just based off what we're seeing. So 100% expected upside for the next 12 months. That's ridiculous. That's super, super high. Now, is that going to happen? Probably not. But for it to be so high, you have to understand analysts are extremely bullish on this stock. Maybe we want to get in and go for even a fraction of that, maybe 20, 30, 40%. While Alibaba is on a huge pullback, its average right now is significantly below where it should be, considering their profits they're putting up. Their next earnings look good, but they've been missing expectations very regularly. And so at this point, Alibaba does look like a very, very interesting, in a good way, investment under $100. So I'm definitely going to keep my eyes on this. Oracle stock. This is my favorite right now, as far as what I've already bought into my portfolio. I've got $31,000. I also have some leveraged Oracle. So this has been my favorite, but will it continue to be? We'll see, because it kind of depends on what happens up until their next earnings. They still happen for 80 days, but I do want to see how that affects the stock price. Can we get back up to 250 like we literally just were? Oracle makes almost too much sense to me. Their government connections, they're doing build-outs for OpenAI, they're doing build-outs for Trump, they're doing so much. They bought 20% of TikTok. That's not going to be the biggest revenue generator ever for them, but it's something extra. And then their regular cloud monitoring revenue is up 94% year over year. That is ridiculous. Their earnings have been really breaking records almost every single quarter. This recent one was breaking more records. So I am incredibly bullish on this stock from here on out, especially in the 135 range, which is where I bought before. So I'm up on my Oracle shares, but it's pulled back a lot since then. I would love for it to keep going down so I can buy more. Price target, let's go over that. That is going to be 74%. Ridiculous. And we were literally just there at 250. I think that is very realistic. ServiceNow, you guys all know about ServiceNow at this point. Unlike Oracle and Alibaba, ServiceNow is actually pretty high up. This was a super kind of overvalued, I would say, stock for a very long time. So it made sense that it pulled back. It still has a price to sales ratio of about 9, very high, not cheap on paper, like some of the stocks we're about to go over after this. Their price target is 42%, 42%, a little bit higher than I was expecting actually, because it already gapped up a little bit. So this was an $80 stock literally just a couple weeks ago. If it hits the 80s again, I'm going to buy in heavily because that's where it typically has massive runs from. But they're partnered with Microsoft, Google. They've got Oracle even. Basically, what they're doing, oh, and so many other companies like OpenAI, Anthropic, etc. But basically, what they're doing is replacing employees with AI agents. So this stock is on this list as far as safe stocks with a lot of upside, but right now, because it's already gapped up from the 80s, where I had a big buy alert at, I personally don't want to be buying it super, super heavily. So it's not going to be the winner here. Figma. Figma is a stock that Jake's gone over in the Discord a lot. He's talked a lot about this stock, posted a ton of research, and followed its latest earnings. They've been doing extremely well. Their next EPS doesn't look great, a little bit disappointing, but they have almost 100% upside. Check this out, 79% expected upside. And I just made a ton of money on Klarna, which has pulled back like this stock, Figma. It's pulled back from the IPO and then really rocketed once people realized how much it's really pulled back. It just didn't make sense anymore. Pattern is up a lot. That's another similar IPO that pulled back. A lot of those IPOs are really, really moving now. So I expect Figma to follow, but it's a little bit too volatile for me right now because it has such a high price to sales ratio. Microsoft, super safe stock, just too high for me to be buying extremely, extremely heavily. Now, this is kind of a leveraged bet on the S&P 500, but I would still want to buy below 350. That's where I would really buy heavily, but I think they're really set up to dominate quantum because they could just go and buy out any research lab, any competitors. They're already making advancements. So I think they're very well set up for the next maybe decade or so, but at this price, I wouldn't be buying super heavily. Zillow, leveraged bet on real estate. This is one of the biggest no-brainers, I think, in my portfolio because I've already made a ton of money on it before. We're talking, buying in the 20s, selling. Well, my goal was to sell it at $62. I didn't quite make it there before I decided to cycle that money in dollar stocks, but still 100% gain. Rebought at 40, sold at 80, 100% gain. Now I'm trying to do the same thing. It's been a while since I've been in. The real estate market has slowed down, but when it picks back up, the stock should do extremely well, just like it did every other time that it had these cycles. So I think this is a no-brainer. It's also got extremely high upside. Let's see, we skipped it. 100%. That's pretty crazy. Netflix, the only criticism I have for Zillow is just that they might fall a little bit behind because they've implemented AI, but AI could really eat at their profits. So that's my only criticism. It's the only reason it's not the biggest position and why I'm not buying super heavily right now. Netflix, last time I bought at this price, I made a ton of money. I made 42% very, very quickly, and I didn't even sell a top. Now it's pulled back. But Netflix just isn't really what it was when I was buying. They've actually, and this is a bigger deal than how it might seem, they've lost a lot of their popular shows, whether it's because of Disney or other reasons. They don't have much to offer. There's nothing really exciting on Netflix, and that's just from a like customer point of view. I have Netflix. But then if you look at their business model, just a whole lot of things with the subscription, people complaining about pricing, always increasing things like that. People aren't too happy with Netflix. What I will say though, the reason I'm looking to re-enter is that Trump bought bonds at the very, very low 80s, which basically means he's kind of bailing out the stock. He bought $2 million worth of bonds. So I don't think Netflix can fall a lot lower. Pfizer V, what's up with this stock? It's down off a cliff, down 72% in the last year, but Michael Burry just stepped in, and the stock now is actually pretty good upside, but I'd say not really crazy compared to the other ones on this list. 36% upside. Almost every other stock had more upside here. I think maybe every other stock. Let's see Netflix's upside. Let's see that real quick. Yeah, so lowest upside, but Michael Burry stepping in. We got insiders stepping in. We got hedge funds going from selling to buying. I think it's worth getting in Pfizer V pretty lightly and selling covered calls weekly. But the number one stock that I would continue to buy is going to be Oracle. Still, they are set up to dominate. They are super relevant. They're breaking records. Everything about this company makes me want to buy. Guys, if you would choose a different stock or you want me to review another stock, comment it down below and join the Discord because I post everything live in there.